I shall be talking through trading versus investing. So, are you a trader or are you an investor? So, calling someone who trades an investor is, of course, using the word inappropriately and vice versa. So, like Warren Buffett said, calling someone who actively trades in the market an investor is like calling someone who actively engages in one night stands a romantic. That was a quote by Warren Buffett. Okay, so what is trading? Trading is when you buy low and you sell high. Very simple, over a very short period of time and frequently as well. Okay, what is investing? Investing, on the other hand, is when you buy a security, you hold it for a certain time or an asset, and then you sell. So we're talking about securities, we're talking about stocks, we're talking about commodities, we're talking about so stocks, commodities, foreign, forex, for example, currency pairs. Yeah, that's what I mean. Okay, so what do traders believe? Traders mostly just want to they just want to beat the market really. They believe that they could, they've got skills enough to be able to take advantage of mispricings in the market. Investors, on the other hand, they believe that if they could buy the asset and hold it over a longer period of time or duration, they will be able to make some, tidy profits in the market. Yes, pardon me. Right. Trading duration. So traders, they tend to hold the securities over a shorter duration or period of time. Investors, on the other hand, they tend to hold it over a longer period of time. We're talking about years, even decades. Right. So traders return. What do traders expect in terms of returns? So traders, on average, we're looking at 10, 15% on a daily basis or even weekly sometimes. And some hold it for minutes or seconds even as well. Investors, on the other hand, it's not abnormal to get 10 to 15% annually because they believe they want to plant a tree, a seed, which is going to bloom and grow into a tree on the long run. So, what are the trading tools available? So, traders they tend to use clever charting tools. They tend to use what we call oscillators, which are indicators rather, which is oscillators. There's quite a few of them out there, which gives or guides them into the market when it comes to direction. Investors, on the other hand, they tend to of course, they rely on the management forecast, they rely on the balance sheets, they rely on the news in terms of their guide to guide their way as a guiding principle towards the price forecast and making future calls. Okay, what are trader strategies? We have different types of traders and how long do they hold their position for. So let's just quickly discuss this. So we do have scalpers. The scalpers are the ones who tend to hold their positions in over seconds or minutes. We have day traders, and of course, scalpers do not have any overnight position. Day traders, they do not have overnight position either, and they hold their position and get rid of it within the same day. We do have swing traders. Swing traders, they tend to hold a position over, we're looking at a couple of weeks, really, 2 to 3 weeks. And position traders, they tend to go from weeks. And sometimes you do get years with position traders as well. So these two guys, position traders and swing traders, they do have overnight positions. And what about investor strategy? Investors, they believe the price will always go up or down, but most of the time the price would always recoil and would, eventually fall on an upward trajectory. And of course, investors as well, they believe they could benefit from, the price appreciation, price movements. They look at stock splits, even though it doesn't really benefit anybody when it comes to stock splits. And of course, they look at dividend as well based on their holdings. Okay, so what are protection that traders use? Traders tend to use the risk. You hear a lot with traders risk reward, so they tend to use a risk management strategy most of the time. They use a protective stop loss, which protects them from the markets when they when they want to make a trade at a predecided price. And investors, on the other hand, like I said, they believe prices would always recoil they tend to do what it's quite common actually, the averaging principle. So when the prices are up or down, they tend to keep buying regardless. So overall, they tend to fare better in this kind of situation. Okay, I hope that's been able to explain the difference between or the differences between traders and investors. Please subscribe and sorry, leave your comments below. And if you have any other information or you want to watch more videos, please do subscribe. Thank you.